industry, it really did. And not much of a move coming in. When you take a look at the move, you are looking at a bumpy week for stocks, of course, that saw the major averages eke out those modest gains that we saw coming in on Friday as well. So when you take a look at the S&P 500, you're looking at gains of about 0.2% for the week, while the Nasdaq Composite inched up just about 0.1%. Dow as well added about similar moves coming in for the Dow as well, and that's the kind of handover that you're looking at. Of course, it was the fourth winning week in a row for all three averages, helped by a stronger than expected jobs report as well on Friday that gave more support to the idea that the Federal Reserve may pull off a soft landing for the US economy, and the Dow, of course, closed at a record high after the report as well. Those are the kind of gains that we saw coming in. Now, of course, investors will be keeping an eye on international news this week because tension is still running high in the Middle East as well, and that is something that we're keeping a very close eye on, both for equities as well as oil. And firstly, let's also take a look at the economic front because there's key releases as well this week that include the Federal Reserve meeting minutes as well on Wednesday, and the consumer price index report on Thursday that will be on the deck as well, and that is something that we're keeping a very close eye on as well. Earnings season also starts to heat up, so you're looking at releases coming in from Delta Airlines as well as JP Morgan Chase that we're keeping a very close eye on that are due out on Thursday as well as Friday. But with that, let's also take a very quick look at what the crude markets did because US crude oil posted its biggest weekly gain in more than a year. Like I mentioned, it was of course the Middle East tensions that were important and in the spotlight when it comes to oil as well. Traders fear Israel could strike Iran's crude facilities in retaliation for Tehran's ballistic missile attack. That is something that we're keeping a very close eye on, and US benchmark WTI surged 9% this week for the biggest weekly gain since March 2023. When you take a look at global benchmark Brent as well, you're looking at similar gains coming in there as well because 8.4% of a gain for the biggest weekly advance since January 2023 is what you're looking at. When you take a look at Brent as well, now of course US crude oil spiked just about 5% on Thursday after US President Joe Biden indicated the White House was discussing an Israeli strike on Iran's oil industry as well, and that is something that we're keeping a very close eye on in terms of any other commentary that comes out from the US as well. When you take a look at the WTI, you're looking at gains coming in of just about 0.9%. Brent as well on a daily basis, 0.6% gains is what you're looking at as well. Now, of course, staying with commodities, then Goldman Sachs believes oil prices could spike up $20 per barrel if Iranian production witnesses disruptions. The estimate is centered around the assumption that if the market were to see a 1 million barrels per day drop in Iranian production, prices could peak by $20 per barrel around next year. Now, Goldman Sachs cites the spike in prices basis OPEC Plus refrains from responding by increasing production. So that's the important update coming in as far as Goldman Sachs commentary on crude is concerned.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits, and then break right through them. Become something more. It's my time to rise.